Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Finally, at least we are twinning, even though the markets may not be, doing quite great, but at least broader markets today have come back in the green and they're outperforming today.
Absolutely, Vinny. Like you said, we are twinning, and the broader markets and the benchmark indices aren't twinning. Actually, if you look at the way how they're performing, divergent moves coming in. When you look at the broader markets and the benchmark indices, no doubt the benchmark indices have recovered sharply from the day's lowest point, but the Nifty Bank is still hovering with cuts of about 1% or so. Broader markets, like I said, at the day's highest point. The divergent moves coming in from the benchmark indices as well as from the broader markets, but a lot of stocks moving on stock-specific action.
Absolutely, a lot of stocks that have been moving on the stock specific action. That's how the market setup is looking like. But let's get started with that stock specific action. And on the technicals, we're joined by Ashish Kyal, while from the research team, we have Ashish as well as Ankita joining in with us. A very good afternoon to all three of y'all as well. Let me start with the first stock that we should be talking about today. Is going to be two names, that is ITC as well as Pratap Snacks. Now, according to Economic Times report, seems like ITC is evaluating buying 47% stake, that is the Peak 15 partner stake in Pratap Snacks. If this actually goes through, then there'll be an open offer that will be happening as well, and that will trigger an open offer of 26% additional that will be happening as well. Now, in terms of valuation, when you look at Pratap Snacks versus a Bikaji Food, it's quite cheap in terms of that as well. Market cap to sales for Bikaji is at around 6-7 times, while for Pratap Snacks is at around 1.7 times. So, comparing to a listed player, quite cheap in terms of that as well. This is in a strategic move that helps in terms of ITC to furthermore, give them a headroom in the regional pockets. Also, distribution channel of Pratap Snacks may be something that they could leverage as well, increasing their snack business as well. They do have bingos, they do have finger snacks where they're currently there in this business. But yes, that's why we're seeing a bit of a focus coming in on Pratap Snacks, especially seen a very sharp run up. ITC managing to hold on to gains of almost 2% as of now.
Alright, let's move on. Let's talk about Maruti Suzuki, and that particular counter is in focus because you have Citi that has come out with a note on Maruti Suzuki where they're seeing a pickup in the monthly sales for Maruti, and expected robust Q4 earnings will be the key triggers for the stock to gain going ahead. They've opened a 90-day upside catalyst watch where Maruti is Citi's top pick in the auto industry. They're saying the sales volume will be supported by sustained demand and inventory restocking after a significant drawdown in the month of December. They're saying slightly they've increased the sales volume estimate for FY24. High operating leverage and lower discounts will drive strong Q4 results, is what Citi has to say on Maruti Suzuki. They maintain a buy stance. They've set a target price of 14,200 rupees on the share.
Let's move on and to the first stock on the technicals. Ashish, you've picked out Sterlite Tech for us. This one had seen a bit of a consolidation in the last 1 year specifically. Now, in the last 5 days, a different story seems like is shaping up. We've seen 8 to 10% returns in the last 5 days itself. So, is this just the beginning for Sterlite Tech to see an up move?
Hi, afternoon to you and all the viewers. It looks like a beginning because we can see the sector has been outperforming, but Sterlite Tech has been late in the party. And but it is shown a very strong positive divergence, gave a strong breakout on the upside, and I think the stock can be headed towards the level of 160, which is the previous pivot high. So the target for Sterlite Tech over short term is 160, and from the medium term perspective, we can even expect it to go to 180 levels. And on the downside, one can maintain a stop loss of 140 on the downside.
Alright, moving on, Ashesha, let's talk about Sula Vineyards, and why is this particular stock in focus today?
Well, yes, so the Maharashtra government has gone ahead and revived the WIPS, or the Wine Industrial Production Scheme. This is with retrospective effect from 2021. For the last 3 years, the government will be fully giving the incentive. Remember, Maharashtra government levies VAT at the rate of 20%, and 16% of it is refunded back to wine producers. And for the coming years, that is from FY24 to 28, it will be capped at 20 crore per unit. That's a bit of a negative, but the street clearly has taken it positively. We in fact spoke to the management earlier in the day, and the management said that it is a big relief for the company. The company has been waiting for this to come through for the last 3 years, and it has finally come through. Big overhang for the stock is now out of the way. Company will receive large chunk of about 140 crores arrears for the last 3 years. The company also said that they will be utilizing these proceeds towards capex and for debt repayment. 3 units is not the end of the story. They will also be setting up more wineries. So positive commentary that came in for the management and positive with respect to revival of the scheme is also a positive, and hence the stock is gaining in trade today.
Okay, let's move on and talk about Godrej Properties then. And Ashish, Godrej Properties has seen a very, very good run-up in the last 1 year, more than doubling in terms of the price or return that it has given to an investor. Should one start booking out profits now, or are you expecting a further run-up?
If you look at the overall realty space, the entire sector has done exceptionally well over the past 6 months or more, and Godrej Properties has continuously formed a higher low. So the overall pattern remains bullish. If you look at the weekly chart, it formed a classical rounding bottom pattern, and that shows that there's more momentum left on the upside. And over short term also, we can expect the stock to rally towards the level of around 2550 levels. So the view is bullish. One can create long positions at current market price also for 2550 as the target, and on the downside one can maintain a stop loss of 2290 levels.
All right, moving on, let's talk about the stock of the day. It has to be Grasim. We've been talking about this particular counter, the reason why it's in focus. We all know that they've entered the paint business, isn't it, Ankita?
That's correct, Cheryl. Finally, Grasim, the much talked about stock in the paint business, has entered the paint business today. In fact, it had a gap up opening in the morning, but it has succumbed to the selling pressure. Right now, it is down 1.5%. And in fact, all the other paint stocks are also in focus, like Asian Paints, Burgess, Narolac. The impact coming in with the opening of Kumar Mangalam Birla has inaugurated 3 facilities. Birla Opus Paints today, located in Punjab, in Panipat, and also in Tamil Nadu. Now, Grasim's entry into the paint sector was announced 3 years ago with an initial investment of 5,000 crore rupees, but that was later doubled to 10,000 crore rupees and is expected to shake up the industry's dynamics. Now, reports suggest that the overall profit pool of the paint sector may experience a slight dip as the players are likely to increase their advertising spend to really safeguard their market share. Now, this impact is likely to be more prolonged among the tier 2 and tier 3 players from whom Grasim is expected to capture the market share. But for now, Grasim Industries is trading with a downtick of 1.5% right now, succumbing to the selling pressure.
Okay, that is surely Grasim Industries that we're watching out for. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Very special guest is now joining us on the show. Anant Nahata is joining us from Exicom Telesystems. It's a company which is en route and making a debut on the Lal Street, and it's in a very interesting space. We have Mr. Nahata. Anant, let me start by asking you, can you explain the business model right now? How the business model is looking? What business are you in, and what are you attempting at in the next 2-3 years? Because it's a very sunrise industry we are talking about.
Thank you for having me. Exicom is a power management solutions company, and we operate in 2 businesses. First one being EV charging products. Here we develop technology and based on that technology manufacture various kinds of EV chargers which are used for charging electric cars at home, charging electric cars at workplaces, or charging in public environments or bus depots. The second business that we are engaged in is called Critical Power. That's a 3-decade-old business where we manufacture specialized power electronics and lithium-ion battery systems which are used in telecom networks. The purpose of these products is to make sure telecom network gets that specialized power requirement and is up 24/7. So whenever there is grid failure or grid interruption, that's when the batteries come into use. But overall, the common thread between these 2 businesses is power electronics, where we have 30 years of experience in designing, manufacturing power electronics solutions.
How are your capabilities right now, and what are you putting together next 2-3 years? How can your capacities or capabilities improve or enhance?
So we entered into EV charging business about 4 years ago, and thanks to the industry growth and our hard work and relentless effort at it, It has become a sizable business for us now, which counts for almost 30% of our revenue. However, we need to appreciate that still these are early years of electric mobility in India. As a country, we are selling about 100,000 EV cars and 2,500 buses, and this is just 2.5% penetration. So imagine what the market would look like when there is 10%, 15% penetration. And as per CRISIL report, the electric mobility and the EV charging market is expected to grow at 50 to 60% CAGR over the next 4 years. That's what we are focused on. That's where we have strength and leadership position today, and that's the area we are investing in terms of capacity, R&D activities, expansion into new geographies in future.
In this field, and what technological upgradation would you adopt going forward, or levers of strategic processes to improve the margins too?
So last 3 years, our margins have improved from 4 to 6% to in H1 FY24 to about 9% EBITDA. Our businesses are a combination of mature industry and high growth industry. So for some part of the business, we're still in investing phase where the whole industry, whether it's the auto OEMs, the charger manufacturers and other components, other stakeholders in the EV ecosystems who are investing to make sure EVs proliferate, in masses. And to do that, there is a very steep technology curve which has been witnessed in the last 3-4 years. If you recall, the EVs in 2018-19 had sub 100 kilometer range, and today, even in mass market EVs, it's common to have 400-500 kilometer range. And it's not just about the range. That means huge technology upgradation in the car, with battery technology, other components. That means technology upgradation on the charger side to be able to charge these EVs faster, quicker. And there is a technology roadmap laid by the industry and companies like us, which we are investing on for future.
Any peers of yours in the listed universe, or not in India, you have global peers? Can you tell us about competitive landscape, your kind of work? Are there some more players happening in the system?
Yes. So electric mobility is a very vibrant ecosystem today. We have players, ranging from startups to established auto ancillary companies to foreign companies coming in this sector, producing various elements of the EV ecosystem, including EV chargers. And that is what is required for the industry. Today, there are few companies trying to educate the market, but if there are more companies, it creates a positive flywheel effect. More companies putting chargers on ground, more people get confident to buy cars. More cars are on the road, further creates demand for chargers and for other components. So that's what we see happening in the industry. That's what we have seen, but the pace of this has increased. As far as peers are concerned, we have listed a couple of peers in our RHP.
What about the proceeds of the issues? Where are the money will be utilized into?
So we are raising, there is a combination of fresh issue and OFS. Fresh issue is about 329 crores and OFS is about 100 crores. And the main proceeds of the fresh issue is going into capex for building a new integrated manufacturing complex in Hyderabad. About 40 crores is going into R&D development. R&D always has been our backbone. We've always invested in R&D, but the aim is to invest more to achieve our objectives of making technology faster, expanding geographically, and going after some new use cases. The third investment is happening in working capital, both in terms of retiring certain working capital limits that we have today, plus investing in new working capital, and the remainder is for general corporate purposes, for various things, but primarily to build sales distribution channels for our products in India as well as abroad.
Percentage of the money would be utilized for this expanding the existing lines. I want to understand, and how much time will it take for them to get completed and then start contributing to your numbers?
Right. So about 150, close to 150 crores is being invested out of the IPO proceeds at the Hyderabad manufacturing complex. The total investment is 170 crores, and but out of the IPO proceeds, 150 is being used. The construction is already underway, and in Q1 of next calendar year is when we expect to start trial production at least.
Anant, we'll let you go on that one. Thanks so much for your time and good luck, and look forward to you having over again once getting listed and also in the process. Good luck for your IPO. Guys, with that, it's back to you in the studios.
Okay, that was an interesting chat, an upcoming IPO that one should watch out for as well. But let's move on and keep it going with all these stocks that have been buzzing in trade on the back of news flows and technicals. And the next one that we're going to talk about is two stocks, HEG and Graphite. They go hand in hand, and this one is on the back of a brokerage note that is from Jefferies. They're retaining a buy stance with a target price which they've revised for upwards also. And when you're looking at it, the upward revision is actually coming in terms of 650 rupees for Graphite and 2,300 rupees for HEG. What Jefferies is highlighting, they're cautiously optimistic for FY25 expectations for both Graphite as well as HEG, and they're foraying into different verticals, emerging opportunities, decarbonization. That's a good tailwind for the company going forward as well. So on the back of that, HEG and Graphite, both of them today are buzzing away in trade with gains of more than 5 to 8% in that range.